Hello, everyone. I'm happy to be here, and I'd like to say to Yossi for giving us this chance to share with you our experience of developing the market surveillance solution. And before I start, let me introduce myself and my colleague and the company which I represent. I'm the head of financial market division, responsible for solutions for financial sector in my company. The company I represent is Prognoz, which is a global business intelligence vendor. And thanks. The company now is more than 20 years already, and the headquarters is located in Perm city, and we have about 1,500 people, which are developers and analysts. And next slide, please. Prognoz platform is included in the Magic Gartner quadrant, which is a sort of rating. Next. But the Prognoz is not just an IT company. We do a lot of applied research in various areas, including modeling, prediction, risk management, financial engineering, and so on. And our risk laboratory has close relationships with universities around the world. Vyacheslav Arbuzov is my colleague. He represents the Risk Lab here today. And today I would like to share with you our latest market surveillance solution, which is developing with collaboration with Exact Pro, and I hope it will be interesting for you. The solution, which is called Timeline, is used by the central bank since 2011, and it performs detection of market abuse, and it performs investigation process of market abuse cases. And there are two major things that I would like to focus on here today. These are some of the market abuse recognition models used by high-frequency traders and the high-frequency data visualization. Next slide. We have the list of predefined models out of the shelf, and there are actually two versions of these models. The first version applicable for in case if we have both counterparties of each trade. Actually, it could be used by regulator or large broker. And the other version of these models is applicable when we know only one side of each transaction. This different version gives different results. So the first version of models give almost for sure case if you have some kind of abuse, and the second one gives some fuzzy results. So we need to investigate further to find out is there any abuse here detected. Our solution is heavily focused on the high-frequency data visualization to provide deeply investigation process and alert explanations also. This solution operates very fast because it's in memory, and solution provides very smoothly drilling down process from day by day dynamics into the intraday dynamics. And next slide, please. And intraday dynamic contains agent resolved data, which means that we have detailed information for each account, for each trading account, and we have such parameters as number of trades, number of orders, cancellation ratio, net inventory, and so on for each trader, both for while trading date and for a selected period, if we want to have. Next. So on the bottom of the screen, previous slide, please. Yeah, on the bottom of the screen, we can see the net inventory profile of the selected trader. So we have checked this trading account, and we have the net inventory profile below here. This shows how this particular trader operates, and we have market trades here. Red are selling trades, and green are buying trades. And next slide. Next slide, please. Yeah. And we can zoom it in and to get more detailed information. So we can see that there are two kinds of red markers. It means that we have dark red and bright red, which differs how the trade took place. So it means that there are aggressive trades and some kind of passive trades. And also we have orange markers, which represent cross trades. If we select several accounts, and these accounts trade with each other, we have those sort of marks representing cross trades, so-called. Yeah, next. And we may easily click to any point on the timeline and drill into the order book, which represents the order book on the selected period. So you can see the order book, and we can see the selected. This bar shows us the fraction of the selected trader in this order book. And also we have the bid-ask spread here, which is gray. In some historical period before the time that is observed. And we have those lines which represent order flow for selected agent. So we can see the dynamic of each trader, how it operates in terms of putting and canceling the orders. So we can see some kind of patterns. For example, you can see those points. So each point is a single order, and we can see that some agent put and cancel orders in some manner. It looks like market abuse called layering. And on top of that, we have a situation center, which actually early warning system, which can provide us some indicators to make some preventional decision, and maybe to stop the trades, or maybe to stop the activity of selected trader, if you want. And this solution is based on distributed calculation engine, which has algorithm configurator, where we can define user-defined algorithms and configure how it should work. And you can see that the exact pro component here is implemented, which is provide us online online feed, online data processing, and another source that we have here is batch files, which provide us day by day dynamic to provide day by day batch processing. So I'd like to go to the next next presentation regarding the models which detect high frequency abuse.
So what is the opportunities of such architecture? Inside you can see the dynamics of activity in Russian equity market, and you can find that blue line it's number of orders per day, and red line it's number of trades per day, and average number of orders per day about 10 million orders. And in the peak of 2012 year, it was 37 million orders per day. And such architecture of timeline can process such big volume of orders. So, and questions is that who is generated such large number of orders? So in European market, as based on research of Tab Group, the 60% of all orders are generated by HFT agents. So the most part of order flow in the markets generated by HFT, and so how to detect abuse behavior of such traders, it's question. So CFTC made some classification of all HFT strategies. So there are different strategies. There are good strategies like market making or some arbitrage in different markets, and there are bad strategies, abuse strategies like spoofing or squat smoking or layering. So how to detect such behavior? So in previous year in press, in news, there are different news about detection of some manipulation in US markets, and so such companies pay many monies for these manipulations. And for example, there isn't a news about Singh Sarao. This is guy manipulating in flash crash, and so now it's departing to the USA, and it's very bad history. So I'm concentrate in block HFT abuse strategy detections. It's quote stuffing, quote smoking, spoofing, and price fade. What is it? In this slide, you can see the example of quote smoking strategy. What for this strategy? If the guy wants to sell in the market, but he wants to sell better than in the market, for example, then they can make best ask in the market, fluid best ask, and to create some image in the market that the price goes down. And after simple trader sees such behavior, he thinks that price goes down and he wants to buy using market order. But in reality, the price is different. So there are different ways how to detect such behavior, and we can use different metrics of agents. For example, try to see to the number of trades or number of orders of such agents, or try to see the best price ratio. It's the fractions of the orders which come to the best prices in the market. And if all orders comes to the best prices, and this guy have many orders, and there is volatility in best bid or best task, such guy can be detected as quote smoker. So another strategy is quote stuffing. If the guy wants to flood markets of large number of orders and to create delay to the other market participants, he can generate thousands and hundreds of thousands orders per milliseconds to flood markets, to flood the market orders. And so this behavior creates some delay in the other markets participants, which try to transform or try to make decisions on such data. And there is simply criteria like number of orders per interval, for example, per second, or order to trade ratio. So next strategy, it's layering. If the guy wants to buy or sell, but he wants, for example, to buy in best bid, he can flood sell side of order book by limit sell orders and create one buy order to the best bid price. So such behavior can be detected as layering, or layering. The synonym of layering is spoofing. So it's more complicated procedure of detection of such behavior. So we should know how imbalanced orders of the agent, or how in what part of the order books comes orders of such agent, and fractions of orders in the visible part of order book. So there is another. It's not abuse behavior, but if the traders, for example, get short position, for example, and he wants to impact to the market, he can create imbalance in the order book, for example, like in this case, in sell side of order book. And so there are many orders in sell side, and when in the market there is some trade, he canceled these orders because he afraid that his big number of orders would be executed. So it's not abuse behavior, but such behavior can say that this guy doing something wrong. So possible criteria for identification of such behavior, it's number of canceled orders at the same time, for example, after trade, or range of prices of orders, or number of orders canceled before trade. So that was part about some explanations of HFT abusive strategy. And so if you have some questions for me and Michael, we ask.
from your point of view, what's the difference between in strategies between market makers and the guys who do something wrong in the market?
Mhm. What is the difference? So the difference is that market makers try to provide liquidity to the market, and it's the business of market makers. But in abusive strategies, HFTs try to impact to the market and to make the direction of the market in the correct. So the market makers try to enter orders to the as buy side of order book and also to the sell side. So the imbalance of orders in the order book in buy side in sell side in market makers should be equal or near equal. But at the abusive strategy, such imbalance should be not equal.
By the way, on the Moscow exchange, we have the identifier that it's a kind of signature that this guy is really market maker and not. So we can use this attribute.
Just to continue the same line of discussion, did I understand correctly that your patterns, which you used to find market abuse practices, really catched the market makers which operate on MOEX exchange, and you just know the identifiers and other identifiers for these particular guys who have market making obligation and skip it off from your attention?
Actually, no. If you look at the layering pattern, it produces a real huge imbalance in order book. So, but he doesn't intend to make a real deal. So, actually, for example, if the HFT which provides layering wants to buy, he put the order to buy, and simultaneously he got some orders on the other side of the book, order book, to put the price down, to make the vision like there are a lot of demand to sell. So once he bought, he cancelled his orders to sell. So it's not like a market making strategy.
And how your pattern work with market making strategies, which also, according to the reasons out of concrete market, also do the same actually. They try to move their pricing on some level because of some conditions.
Actually, usual market maker doesn't intend, and he doesn't want to get the price movement. Market maker would get benefits if the price will be flat. So he got selling and buying. He operates on the both sides of the order book. But layering does.
And I'll just give you one example to clarify understanding. For example, on US derivatives markets, oil future prices go up. That means typically for all currency nominated contracts in Russia, all prices will go down typically. If some market maker has obligation in maintaining liquidity in such type of instrument, typically he, I guess, he will move pricing, his pricing down.
Sure, yeah.
So
Absolutely.
it's the same.
Yeah, not exactly the same.
But it was the question, how you understand this distinguish?
So market makers usually have a large number of trades per day, but for example, guys who made layering or spoofing, they haven't so much trades like market makers. So, for example, order to trade ratio of such guys which make spoofing would be higher than in market makers.
We have different programs for market making, and large number of trades or turnover is not always the obligation they should follow. Sometimes they should just keep a spread. I don't know all the details, but that is what I know actually. And one more question. Do you really think that layering is applicable to Moscow Exchange stock market because of our pre-trade controls? This layering guy should have a lot of resources to imitate high demand, but he will eventually will be stopped by our limit controls.
Actually, the guys who making layering, they are the clever guys, and they will never they would never operate using just one single account. So they split their orders through the number of accounts, maybe from via different brokers. So it could be real complicated, but I'm sure that MOEX is not the exclusion for the guys who are doing layering.
Hi guys, you're being put on the grill, I think, at the moment by some of our attendees. I think the difference is basically about trading patterns, really. When you're looking at people that are doing actually layering and spoofing, as opposed to purely market making. Well, I mean, the market makers have an obligation, and they're not. The HFTs are not going to put price levels or orders on the book on 20 price levels. They're going to do it up to maybe 2, 3, 4 max most of the time. Market makers, when basically the market is coming is turning over, they're going to be canceling some of their quotes depending on when the market is heading. I mean, there's a very fine line between market making and so-called abusive trading pattern, and the real fine line is between the actual trading pattern when there's an actual will to actually do some layering and spoofing, as opposed to actually just adjusting your quotes when you're a market maker. And yeah, you're right. It's neither a he or a she. Most of the time, it's an it. But guys, coming back to you, sorry.
Yeah, thank you.
Where would you say that today your software, your market surveillance software, actually has an edge as opposed to some of your competitors, like Smarts or Sinova?
Can you clarify, please?
Okay, what's the difference? What do you do better than some of your competitors when it comes to market surveillance?
Actually, the things that first we operate on the agent result level. We operate on the pairs of agent. It's the second thing, and we provide really adopted models, which is adopted on our market. So it's first our advantage. So
You support the Russian market.
yeah, yeah. Any more questions?
Okay, thank you.